Okay, this is it. It's Mikkel's last official class. And Kayla's too.
Yep.
Man, if I'd have known that, we would have had a party. I could have brought. You got class tomorrow?
Yeah, at 9.
Oh.
Well, like it's just.
I mean, if I'd have known that, I'd have brought some donuts with little candles or something. We could. And it's Jordan's last class too.
And it's technically Valentine's Day always too.
Yeah, but they're not here, so they might have to. Yeah, they can get their own donuts, number one, and they might end up they might not be done. Who knows? We'll see. So, okay, I thought you had another year of school left. Yeah.
2 years, there's only 2 years here.
Who's going to kick next year?
It's up in the air as far as I know.
All right, let's go over round 7 assignment real quick. I think I corrected these, but I haven't published them, so you guys probably haven't seen the results. But the first question was, might the final results winner, might the results have been different had Digby paid total dividends in the amount of $15 million? Why and show how? And the answer is yeah, would have been different. Okay, if Digby had paid dividends, okay, their assets and their equity then both get affected. Decreased by $15 million, their ROE in that case would have increased to 39.75. They would have had a higher ROE in that case than Team Chester, and not only so their ROE score would have gone up 2.5 or 3 points, whichever it is, but also Team Chester's would have gone down by that same amount. So point-wise, it would have moved Digby into the lead. So just simply a $15 million dividend, okay, which is it's a decent amount. Okay. Question 2 says, what's Baldwin's strategy? And I write, honestly, it's anybody's guess. Okay, but it has to be a niche. Okay, because they're competing only in 2 segments, really. All their products are in the low and size, which is a little bit odd. So it has to be something to do with niche. Would probably be what I was looking for there. And I think. When I corrected these, I looked at them. I don't think I took away points from anybody. It was just kind of a little bit of a guessing game there. But 3, why did Chester pay out a $55+ million dividend? Say C number 1, right? Is that dividend effective? Yeah, the dividend was extremely effective, increasing ROE, really effective. So, and a dividend can also serve to raise the stock price. Shareholders like to get dividends in a lot of cases, and they'll push stock prices up maybe a little bit because of that. So it might have had a little bit of a double impact, positive impact there. But certainly the ROE, I would say, was the biggest reason for that. I was thinking about that this morning and kind of looking at the last round's results too. And while some of these, $55 million dividend in this game, relatively speaking, is huge. Okay. Do other companies, I mean, that'd be the equivalent of Apple, say, paying a $300 billion dividend, really, if you looked at the relative size. Do they engage in quite that extreme? No. Okay. But they do, and that's what's important, and that's kind of why I wanted you guys to look at these, and I don't think the extreme examples are that bad. Do they engage in this type of activity? Absolutely. Okay, absolutely, and for the very same reasons that we do. Okay, they all of a sudden, if they're sitting on $200 billion of cash, and Apple's pretty close to that. I think they're $150 billion, somewhere in that neighborhood. Does that affect their ROE? It absolutely affects their ROE. It affects it negatively. And do shareholders look at that? Yes, they do. Okay, and so Apple has, and right now they've got a pretty aggressive share buyback. Okay, they also have a fairly decent dividend plan that's going right now, as does Microsoft, as do a lot of these companies. And companies that 20 years ago when they were growing, this is one of those things in the initial stages, would it have made sense for you guys in rounds 1, 2, and 3 to pay big dividends and do those types of things? Probably not. Okay, maybe could have aggressively bought back stock, borrowed some money to buy back stock, maybe. Okay, that might have been an effective strategy. Okay, but as we accumulate cash and as these things build and grow, it becomes a far more important part of your tactics, I should say, okay, in doing that. You don't do that if you're Warren Buffett, right? Okay, and Warren Buffett and Berkshire Hathaway has never paid a dividend, and probably never will pay a dividend, at least while he's alive, nor do they buy back stock. Okay, and the reason for that is, and I absolutely agree with this theory, Warren Buffett does a better job of investing that money than I ever will. Okay, why would I want him to pay me a dividend or buy back stock when he's going to do a better job of investing that money than I will? Okay, it becomes more problematic with these companies that are in specific industries. He's a conglomerate. He's basically a mutual fund is what it is. So anyhow, a little longer story than what we need. Okay, 4. What are the impacts of Digby's $75 million cash balance? Impacts would be it contributes to total assets, which reduces ROA. I don't score on ROA, but it is an impact. It contributes to equity. Bless you. And so it reduces. Bless you again. And so it reduces the ROE. Again, it's a huge deal, right? And it's a net interest loser. And I say they could pay down loans. On the other side, though, they do, you would presume, anyhow, and I don't know how this game allots for that. I don't think it does. Normally, if you had a huge cash balance like that, you would be receiving some interest, right? You wouldn't just sit it under the mattress, right? You'd have it in an account that should be earning some interest, okay? But that interest that you earn would never be more than the interest that you're paying on your loans, right? So it's a net loser of interest is kind of why I put it and expressed it in that fashion, okay? Any questions about round 7's assignment? Cool. We're just going to take a quick look at round 8 because it's all done, right? We saw a little bit of manipulation, not too much. By that I mean, last round, you got to gear up a little bit for last round because it is last round, and you guys know that. The computer doesn't know that, so the computer continues to play the game as if it's ongoing. I know a couple of students asked me, geez, why did they invest some money in TQM? Yeah, and the computer's playing this as if it's a real life thing, and they're going to be ongoing. Of some disappointment is the fact that you guys let Erie slip in and actually win, which is the computer team, even though it had been thumped on for 7 rounds, basically 6 rounds anyhow. Erie slipped in and was technically the winner, even though it's a computer team. Okay. Which was a little bit disappointing. I think part of the reason was the 2 teams that have been doing the best, student teams, Chester and Digby, weren't really competing directly with Erie. And so Erie was kind of given a little bit of free rein in the low and traditional segments where it really dominated, okay? And it pushed, and I would say, not boldly, but it pushed kind of hard in terms of reducing costs and doing those types of things. So that's why it slipped in and was successful. Every team made a profit last round. Pretty good, though. And we see 50-50, $47 million, decent. Chester had the 3rd highest profit and yet had by far the highest earnings per share. Okay, again, a factor that I would consider to be pretty important. Chester had a very good ROE, but look at Digby's. They bumped theirs up to 51.5. They did some of the things that they didn't do in round 7. So I probably gave them some hints in the assignments and whatnot. Sorry. Hints that I had maybe had previously given to others, so I don't feel terribly guilty about that. They're not hints. These are things I want you guys looking at, right? Things that I want you to pay attention to, things that you ought to know when you're looking at balance sheets, income statements, and those types of things. Extremely important to manage these things as if you're in that type of a position, even in a smaller company. These things can make a difference. So. Look at Ferris, great sales, and then you jump down to Chester, had good sales. Chester had quite a bit smaller contribution margin. Erie was able to, we saw that Baldwin had a contribution margin that had been approaching 50, but had actually fallen off a little bit. Nevertheless, they bumped up their profit, so they did some things there to actually make some improvements. Erie, on the other hand, was able to really push their contribution margin through the last final rounds, which was important, and I think they probably did that through continued automation and some different things like that, and probably positioning in the low end and those types of things, and how you can save money in the materials, MTBF, those types of things. A couple of things that our teams maybe grasped but didn't grasp as early or as effectively as they could have, that certainly would have lowered costs. We see Baldwin ended up buying back a little bit of stock. Cool. Chester was fairly aggressive. Andrews never did manipulate their stock account. Digby, Erie, and Ferris were all issuers of stock, and even though Erie and Digby both made quite a bit more money than Chester, but Chester had by far the biggest earnings per share. Little debt, not a lot. We see Baldwin's really the only team. I've seen teams really cut their capacity to the absolute minimum that you would need for the final round. Baldwin's the only team that actually sold a little bit of capacity and got a little bit of cash back in because of that. I don't think there was a ton of inventory out there. There's a little bit. We saw some big dividends paid. Look at that. Every team but Baldwin paid dividends. Okay. Chester, the only team, Erie to a much smaller extent, but Chester aggressively bought back stock. My guess is that was the limit as to what they could buy back, because there are some limits on that. Some debt got paid back, current debt, obviously, because that has to get paid back. Not a ton of cash. Erie and Ferris are sitting on a bunch of cash. Chester, 0. Andrews, 0. I think they both had relatively small emergency loans. Small enough that, again, from my standpoint as a banker, I would have shrugged my shoulders and said, yeah, no big deal, right? Baldwin ended up with a decent cash balance, okay? Managing your cash towards 0 is not necessarily a bad thing. I mean, like in most businesses, I always think you want to have some cash balance to take advantage of opportunities that might come around, but managing it towards 0 is not a bad thing. We see the equity numbers, you guys, the student teams, right, were pretty aggressive at trying to control equity numbers. You see the two computer teams had pretty high amounts of equity, so that's good. Interest income, net profit, anything major there, nothing in particular. Baldwin actually netted positive numbers there is what that means when that shows up as a negative. That's from the sale of their capacity. Still, again, as we finish the game, quite a bit of excess capacity, really. Even though we see every team was actually producing more than their first shift capacity, still, I would say, just glancing at this, that there's quite a bit of excess capacity. We didn't see every team at 198%, when we look at the production thing. So, over here, 170, 120, 99, so lots of capacity there, right? Teams could have aggressively sold capacity in this last round. Would have generated some profit. Okay. Again, if you have depreciated items, capacity, which you do, okay, which it's depreciated, and then you sell it, it's technically sold for a gain if it's depreciated to a value that's less than what you sell it for. So that's what this was up here, right? A $3 million gain that Baldwin experienced. Okay, because of the sale. And they could have sold a lot more. I mean, they had lots of excess capacity. Lots and lots of excess capacity. Yeah, not a ton of inventory. A little here and there. Andrews had a lot here in the low end. In this one product, their other product sold extremely well. My guess is age of 10. Was that one getting outside the circle maybe? Was Acre getting a little bit outside the circle, Holly? Yeah. Yeah, so it didn't sell so well. Their Able product sold really well, even though you had a pretty good low price on it. Good low price on bead, but it still had some inventory left. Digby, look at that. Really good management there of inventory. Erie as well, especially in the low end. Look at that. They sold, gosh, 8+ million units. Dominated the traditional end and dominated the low end. Still had some excess potential there. Yeah, Acre was just about on the deal, and so, yeah, that's why it sold some, but it didn't sell all that well, because it was just about outside the dotted circle. Lots of competition there in the low end. There was a lot of products, but nevertheless, Erie was still able to absolutely dominate there. Okay. Should look at why. I mean, was it mainly an age thing? Were they able to keep their age? Yeah. Their two products are really close to the age that you're looking at. Price-wise, right in there, competitive. Okay. Digby gave up quite a bit of potential there. Cool, cool. We look at the overall chart. Kind of, you know, it's kind of interesting that Digby lagged a little bit in terms of their positioning here. Probably would have hurt them a little bit in sales. We see Ferris and Chester right up here at the cutting edge. You know, Adam and Ace kind of falling outside the circle there in the traditional segment. That kind of hurt that a little bit. So HR, you know, Erie was still investing, and Ferris still investing a little bit in TQM, but so it was a decent last round. I think score-wise it ended up being fairly close. We'll go look at the spreadsheet and see. So we had some flops. Chester had the highest earnings per share, but then Digby had the highest ROE. Erie took second place in both those categories as the computer team. Contribution margin, though, Erie had the highest, also had the best increase in stock price, and did have the highest profits, not by much over Digby. Cash flow, Digby actually showed the best there. Digby coming in, if they didn't get any penalties, and Erie likewise, it's leading amongst the student teams, and no penalties. Andrews and Baldwin each got a little penalties for leverage, and Andrews for emergency loans and working capital both. So our final score for the final round. This is not an overall. This is just the final round, right? Okay. If we were to score it on overall, I'd probably give a whole different set of parameters to take a look at, right? Finishing stock price would be far more important, okay? Yeah, there'd be some other things that would be far more important than what we do on a round-to-round basis. So, but Erie won this round. Digby, though, won amongst the student teams. So yes, Digby, you guys are exempt from completing the last assignment. Everybody else, everybody here in Havre gets to do the last assignment. I bet you're all excited about that. One thing I want to take a look at real quick, where everybody's at in terms of, completing their exams. Didn't really want to look at the scores too bad, but okay. So round 1, 3, 1, 1. So Valentine is done, Alicia is done, and Kimberly is done, and Angelique is done. But everybody else is still working. Okay, still working on their exams. So you've got 1 week from today, right, to get those done. So don't pay any attention to the scores because they're not all that relevant. So. Okay, so assignment, final assignment. So I was looking for assignment round 8C. Here you go. This was the easiest assignment for me to write, but it should be the most difficult one for you guys to complete. Sorry. What were the major causes of your team's successes or failures? Okay, now, as you're completing this assignment, please do not say, we failed because my partner was a dingbat, okay? I'm not interested in the fact that your partner was a dingbat. You know, it might be that the dingbat's contributions hurt your performance, that's right, but I'm interested in the performance part, okay? So please don't tell me about your partners being dingbats or those types of things, right? I'm interested in the numerical, mostly the numerical reasons or strategic or tactical reasons that you guys, you know, were successful or were not successful, as opposed to any interpersonal relationships or lack thereof that your team might have had. So everybody kind of clear on that? Okay, how long should it be? You know, it's going to have to be a half page or better, I would think, to fully explain Okay. Hints on how to do it. I'd kind of outline some things, right? You know, these are areas where we were successful. These are the things that we did incorrectly. You know, starting from the beginning. You know, picking a bad strategy, not implementing our strategy. You know, had bad tactics in round 4. You know, that gave us a bad break. Those types of things. So I think if you do that, if you kind of outline it, take a look at specific areas and things that you did improperly, then you should be able to write a decent short paper. Okay. Questions about it?
Do we have a peer evaluation?
Yeah, I will. I'll send that in D2L. The question here for you guys distance was, are we going to do a peer evaluation? Yeah, I think I've got a sheet, a peer evaluation sheet that if it's not, did you say it was located in the Dropbox, Bobby? Okay. I'm pretty sure I have one that's for this class, and so what I'll do is I'll mail that out, and then I will set up a Dropbox, so if there isn't one, there'll be a Dropbox in for you guys to put that in. It'd be a peer evaluation, so I can get a sense of, while you guys here, I can kind of see, it still doesn't give me a sense necessarily of how you feel about how your partners did and how much they contributed and those types of things, so I will do that.
This is all we do by Tuesday?
Yeah, yep. Yep, Tuesday should be fine. These shouldn't take me too long to correct, as long as you guys don't get too crazy and write me a 10-page report. That would be a little bit nutty. So, and then the peer evaluations, all the other stuff's kind of, the Comp XM needs to be done by Thursday, but that's self-correcting, so I don't have to worry about doing that or anything, so should be a problem. So your grades should be done by, if everybody gets done with Comp XM, should be done by Friday. Well, if you're not done with Comp XM by Thursday, then you're going to get an incomplete. So, okay. Questions about that? Okay. Hey, I'm done. Thanks. It was fun. I always enjoy this. I think that, once again, I was kind of right that you hated it for the first few weeks, and then you kind of got into it a little bit. At least it seemed like it. So, hopefully